Hey everyone, and welcome back to your Daily Market Explainer. It's January 5th, 2026, and wow, we've got a fascinating day on the bourses to break down. We're going to get you all set for what's coming up tomorrow, so let's just dive right in.
All right, so at first glance, the markets were in the red today. But, and this is the important part, you can't let that headline number fool you. Because what was really happening beneath the surface was this huge tug-of-war between different sectors. And that's where the real story is, and maybe even where the opportunities are for tomorrow's session. So first things first, let's just get the final score on the board. How did the benchmark indices actually wrap things up today?
So the Sensex, it ended the day at 85,439. That's a drop of 322 points, or about 0.38%. Definitely a bit of a pullback after the run-up we've been seeing recently. And yeah, the Nifty pretty much did the same thing, closing at 26,250. Now, what's really key here is that it slipped just below that 26,300 mark. That's a big psychological level, so it's definitely something we're going to be watching very, very closely. But like I said, those big index numbers, they really don't tell you the whole story. To get the real picture, you got to look at the individual stocks, the big movers that were really driving the action. So let's pop the hood and see what was really going on.
Wow, and this slide just perfectly sums up the whole day, doesn't it? I mean, look at the contrast. On one side, you've got power and infra stocks just on fire. NTPC up almost 5%, Electra Green Tech with a massive 6% jump. But then, on the other side, you see the heavyweights dragging everything down. HDFC Bank, Infosys, both down 2%, and that pulled the entire IT index right down with them. Just a super clear split in the market.
And you know what's really interesting when you look at it this way? It's the sheer force behind some of these moves. That 6% pop in electric green tech, that was all fueled by some big news on a new EV plant. It just goes to show you how a company's specific story can completely buck the overall trend. And then you compare that to a giant like Infosys, where even a 2% drop has this huge negative ripple effect on the whole index.
Okay, so that's the what. But what about the why? What were the bigger forces causing this big push and pull in the market today? Let's zoom out a bit from the single stocks and take a look at the bigger picture. The stuff happening at the sector level.
In this chart, this really lays it all out pretty clearly. You can see that huge chunk of negative pressure coming from the IT sector. A lot of that was tied to worries over US tariffs. Then you throw in some general caution around global trade tensions, and well, that's a pretty strong headwind. Now, the power sector did put up a good fight. It provided a nice little counterbalance, but at the end of the day, it just wasn't enough to push the whole market into the green.
All right, so that's the story of today. But what really matters now is what we do with this info tomorrow, right? So let's get into the game plan, your playbook for January 6th.
Okay, before we get into the numbers, a real quick technical point. We're going to talk about something called the 20-day EMA. Now, don't worry, it's pretty simple. Just think of it like a key short-term trend line. If the price is above it, things are generally looking up. And right now, the Nifty is sitting right on this line, kind of testing it out to see if it'll hold up as a floor of support. So here's the bottom line, what the technicals are suggesting. There are two really important support levels to watch for the Nifty, 26,230, and then the big one, 26,100, which is that 20-day EMA we just talked about. So the strategy a lot of traders are looking at is to maybe buy the dip, especially if it gets close to that 26,000 level. The thinking is there's a favorable risk/reward for a potential bounce back up toward 26,500.
And it's not just the EMA. Other technical signals are kind of pointing in the same direction. The RSI, which basically measures market momentum, is in that neutral zone, so not too hot, not too cold. At the same time, another indicator, the MACD, is still flashing a bullish signal. So when you put it all together, the overall bias seems to be sort of neutral to bullish. This just reinforces that buy on dips idea. But of course, you always want to manage your risk, maybe with a stop loss just below 26,200.
Okay, last but not least, let's pull up the calendar for tomorrow, January 6th, because there are a few company-specific events that could definitely make some waves in the market. First up on the docket, we've got a new IPO hitting the street, Gabion Technologies. It's an SME IPO and it opens for subscription tomorrow. It's a 29-core issue with the price band set between 76 and 81 rupees per share. Definitely one to watch, The performance of these smaller IPOs can sometimes set the mood for the bigger ones coming down the pipeline.
And we've also got a few important board meetings scheduled. You've got Ganga Forging and Prestonic Engineering both meeting to talk about raising funds. And TSE India is looking at an equity placement. So if you're tracking these small and mid caps, just a heads up, keep a close eye on them tomorrow. Any news coming out of those meetings could really get the stock prices moving. So, as we wrap this all up, it really leaves us with one big question, doesn't it? The question for the days ahead. We saw this massive split today. Power stocks soaring while IT stocks took a beating. So, was this just a one-off, a weird day? Or are we seeing the very beginning of a huge shift? A major rotation of money out of one sector and into another. Now that is the key theme to watch. Thanks so much for joining me for this explainer, and I'll catch you on the next one.